been over a decade of reckless spending financed by debt.
The national debt of any country is a critical economic indicator, reflecting the cumulative amount of money that the government has borrowed to finance its expenditures over time. Schiff's tweet shed light to an alarming pace at which the United States national debt is escalating, raising pertinent questions about the underlying causes and implications of such a rapid increase. The realm of economics is often a labyrinth of complexities, subject to the ebbs and flows of global markets, policy decisions, and unforeseen events. Amidst the intricate web, few voices resonate as strong as that of Peter Schiff, an outspoken economist known for his critical analysis of fiscal policies and their impact on national economies. Recently, Schiff has once again raised the alarm bells, drawing attention to the staggering surge in the U.S. national debt, which ballooned by over $1.3 trillion in a mere 3 months. This alarming escalation demands a closer inspection of the underlying factors contributing to this substantial increase and its potential ramification. The fiscal health of a nation is often gauged by its national debt, a measure reflecting the cumulative borrowing and deficits incurred by the government over time. As of late, the U.S. national debt has been on an unprecedented upward trajectory, reaching monumental heights that have sparked concerns across economic circles. Peter Schiff, the CEO of Euro-Pacific Capital, has been an ardent critic of fiscal policies driving the surge. The $1.3 trillion surge in national debt within 3 months stands as a testament to the fiscal challenges faced by the U.S. government. Schiff emphasizes that this increase is not a sudden anomaly, but rather a accumulation of ongoing policies, including extensive government spending, particularly on stimulus packages and relief measures in response to the COVID-19 pandemic. These emergency measures, while crucial in mitigating economic fallout, have significantly contributed to the burgeoning debt. The national debt of the United States has indeed swelled to over $30 trillion as of November 2023, marking a continual ascent driven by the various economics and policy factors. This mounting debt has been a focal point of concern and contention, sparking debates about its consequences and the viability of managing it effectively. The escalation of the national debt is attributed to multiple factors, including increase in government spending, tax cuts, and significant economic stimuli in response to various crises, notably the COVID-19 pandemic. These measures, while essential to stabilizing the economy and providing relief, have contributed substantially to the burgeoning debt. The ramifications of such a colossal debt load are subject to intense debate. Critics of a growing debt point to potential repercussions such as higher interest rates, inflationary pressures, and economic instability. They argued that the weight of the debt could hamper the government's ability to respond to future crises and may impose heavy financial burden on future generations. Conversely, some contend that the debt might not be as pressing as an issue, suggesting that the government possesses the means to manage and pay it off without adverse consequences. They argue that the United States' status as a global economic powerhouse and the ability to issue its own currency gives it a substantial flexibility in handling the debt. The debate surrounding the national debt is poised to persist for years to come, as it remains a critical issue with far-reaching implications. Its potential impact in interest rates, inflation, government spending, and economic stability makes it an essential consideration for policymakers, economists, and the public at large. Awareness of the national debt and its significance is paramount, as it has the potential to affect the lives and financial well-being of all Americans. Finding a balance between addressing immediate economic needs and ensuring long-term fiscal stability will likely remain a central challenge to policymakers in navigating the complexities of managing the national debt. The lack of transparency or mishandling of inflation could profoundly impact society and the economy. For the general population, inflation undermines purchasing power, eroding the value of money and reducing the affordability of goods and services. This disproportionately impacts lower-income individuals and fixed-income households, widening income inequality and threatening financial stability. Furthermore, inflation devalues savings and investments, compelling individuals to seek riskier alternatives to hedge against the loss of value, potentially creating economic instability at an individual level. In a broader economic landscape, mishandling inflation creates uncertainty and market volatility. Businesses face increased costs for production, subsequently passing these expenses to the consumers, thus perpetuating the cycle of price hikes. Moreover, higher inflation might prompt central banks to raise interest rates to curb it, increasing borrowing costs for businesses and individuals. This could dampen investment and economic growth, affecting global competitiveness and trade balances, leading to economic imbalances on an international scale. Additionally, a lack of transparency in managing inflation erodes public trust in economics policies and institutions, fostering market distrust and undermining confidence in the government's ability to navigate economic challenges effectively. Transparency in addressing inflationary concern is critical to maintain public trust and confidence. Clear communication from central banks and policymakers about inflation management strategies can help stabilize the market and temper inflation expectations. By enhancing transparency, institutions can mitigate the adverse effects of inflation on society and the economy, restoring confidence and providing a more stable economic economic environment for individuals and business alike. Schiff's analysis delves into the consequences of unchecked government spending. He contends that excessive spending without adequate revenue generation ultimately leads to a ballooning national debt, posing severe long-term risk. Schiff often emphasizes the peril of inflation, arguing that the injection of vast amounts of money into the economy without corresponding growth in production could trigger inflationary pressures, eroding purchasing power and destabilizing financial markets. Moreover, Schiff underscores the potential repercussion on future generations, highlighting the burden of debt accumulation. The intergenerational impact of amassing such colossal debt could hinder economic growth, limit opportunities, and necessitate higher taxes or austerity measures in the future, impending prosperity for generations to come. Central to Schiff's critics to the government's reliance on deficit spending and monetary policy to fuel economic growth. He argues that these measures, while providing short-term relief, are unsustainable in the long run. Schiff advocates for fiscal prudence, urging policymakers to prioritize fiscal responsibility, curtail excessive spending, and focus on policy that promotes sustainable economic growth without exacerbating debt levels. Additionally, Schiff urges a re-evaluation of the Federal Reserve's role in stimulating the economy. He contends that the Fed's expansive monetary policies, including near-zero interest rates and quantitative easing, have contributed to the government's ability to borrow excessively, fostering a cycle of debt accumulation. The national debt comprises funds borrowed by the government from various entities, including individuals, businesses, and foreign governments. The process of borrowing involves the issuance of treasury bonds, which serve as financial instrument available for purchasing by investors seeking a secure form of investment. These bonds represent a promise by the government to repay the borrowed amount at a specific future date and to pay periodic interest to bondholders until the bond matures. The interest accrued on the national debt constitutes a financial obligation borne by taxpayers. As the national government borrows money through treasury bonds, it commits to making interest payments to those who hold these securities. Ultimately, taxpayers shoulder this burden by contributing to the revenue that funds these interest payments. Projection indicates that the national debt is anticipated to surge to over $40 trillion by 2030. This projected increase is influenced by various factors, including ongoing government spending, economic policies, potential changes in interest rates, and the long-term impact of existing debt. Navigating the path forward necessitates a delicate balance between addressing immediate economic challenges and ensuring long-term fiscal stability. Schiff's warning serves as a clarion call for policymakers to re-evaluate their strategies and adopt measures that mitigate the risks associated with burgeoning national debt. Addressing these issues requires a multifaceted approach encompassing prudent fiscal management, responsible spending, and a focus on sustainable economic growth. It entails fostering an environment conducive to productivity, innovation, and investment while simultaneously implementing measures to gradually reduce the deficit. The surge of over $1.3 trillion in the U.S. national debt within a mere 3 months stands as a stark reminder of the fiscal challenges facing the nation. Peter Schiff's critical analysis sheds light on the underlying factors contributing to this alarming escalation and underscores the imperative for prudent fiscal policy. The road ahead demands a concerted effort to strike a balance between addressing immediate economic exigency and safeguarding the fiscal health of a nation. As debate ensues and policies are crafted, Schiff's warning resonates as a poignant reminder of the peril of unchecked debt accumulation, urging stakeholders to chart a sustainable and responsible fiscal course to secure the economic future of the nation. Thanks for joining the conversation about Peter Schiff's take on the rapid $1.3 trillion surge in national debt. If you found this intriguing, like, comment, and share. Don't forget to subscribe for more eye-opening insights. See you next time. Bye!